What is up, you guys? Nick here. If you're new, welcome. If you're returning, welcome back. In this video, I want to talk about why I think NIO's share price is about to explode. In the past few days, we have seen somewhat of a drastic decrease in the share volume trading and buying of NIO stock, and I want to discuss what this means for investors and NIO ADR moving forward. Is there more room for share price growth in the last quarter of 2020 and moving into 2021? And should you currently buy, sell, or hold NIO stock in these extremely volatile times? But first, Weibull is doing a promotion ending in just 4 days. Sign up for an account, deposit at least $100 into it, and receive 4 free stocks, each worth up to $1,600. This is an absolute no-brainer, guys. Weibull is an amazing trading platform with 0% commissions and unbelievable analytics, keeping you up to date. Like I said, this promo ends in 4 days. Use the link in my description. Don't sleep on this one. Alright, so we saw NIO on the 25th end the trading period of 18 cents at a 0.34% gain. However, we had seen it significantly drop off intraday. NIO has officially passed General Motors and BMW in terms of its market cap valuation. Wow. From a company on the brink of bankruptcy just less than a year ago to being one of the most valuable automotive companies on the face of the planet. This has been a complete 180 turnaround like we have never seen. But can NIO continue to live up to the amounting hype and promise that investors are looking for? Well, to keep a video short, yes. Alright, thanks for watching, guys. I'll see you all in the next one. JK. We as investors need to take a step back, slow down, and really contemplate whether NIO is and should be actually valued more than General Motors and BMW. Does this make any sense, or are investors running away with false hope? Well, it's important to remember that the share price is currently reflecting the future and not at all the present. NIO is still extremely unprofitable, and these valuations are reflecting the potential years down the road, and that's okay, as NIO is absolutely trending in the right direction. In this video, I want to go over 6 reasons why NIO's share price will continue to rise in Q4 and moving beyond. 1. NIO in the month of October increased its delivery figure by 7.37% month over month, delivering 5,055 vehicles in this time period. However, I really do think November will be an absolute record-breaking month for NIO. It's for this reason that I am picking up a bulk amount of shares prior to this delivery release date, and here's why. What many may be overlooking is that China's Golden Week holiday most likely deleteriously impacted NIO's delivery capacity in the month of October, and sales and thus deliveries would have likely been much higher. This 5,055, many analysts believe, would have likely been closer to 5,300 or 5,400. Investors don't actually care about the actual figure in startup growth companies, but instead care about the percentage growth number. And to be frank, although a 7.37% month over month increase is phenomenal, it did, however, drastically lag behind NIO's previous 2 months' growth. I would not be surprised in the least to see this growth number push back up into double digits, which would again send NIO investors into a buying frenzy. 2. Li Bin has stated that demand is far surpassing supply capabilities. However, this supply strain has been somewhat resolved, and supply will be able to catch up to demand in the coming months. Lower than possible delivery numbers since Q2 and Q3 can be attributed to these supply strains. And with an increased notice of demand, NIO has rapidly expanded its output capacity and is now able to reportedly be able to deliver 7,500 units a month. A number quite good for the time being. However, they will still need to rapidly expand this as NIO is rapidly growing. 3. Typically, using historical records, we can see that there is usually a bulging of automotive sales in mainland China heading deeper and deeper into the year. We can see this trend year after year of a bulging sales in November and December. This may also contribute to an elevated delivery amount in November and December. 4. NIO has really burst onto the scene these past few months and is receiving vast amounts of publicity in mainland China and the rest of the world. Up to 40% of deliveries can be attributed to referrals from pre-existing NIO customers. This is showing that their advertising and business model is really working, as making a great, futuristic, clean, electric, and effective product is increasing overall deliveries through word of mouth. 5. China has handled the health situation relatively well in comparison to other countries and has been shielded from some of the deleteriously long-lasting shutdowns. As the world's promising vaccine candidates, many customers who would have held off from a large purchase, such as buying a new vehicle, are now armed with the peace of mind that the world and its economy will likely be returning to somewhat of a, quote, normalcy in the coming months. These people may be more inclined to actually move through with a large purchase. Understanding that their jobs and finances may indeed be restabilizing and secure, analysts are noting that discretionary spending rates will likely increase in Q4 2020 and Q1 of 2021. 6. NIO has recently rolled out their SUV coupe, the EC6, which has not had its proper time to shine in the light yet, and I really think we will see an extremely sharp increase in its sales in November and heading into December. The Chinese consumer has been trending towards smaller vehicles, and this EC6, essentially an SUV crossover, is NIO's smallest model. Together with battery as a service, customers are able to rent their battery, drastically lowering the barrier to entry point. It's truly never been more affordable and easier for consumers to purchase vehicles and then to resell at a higher resale value. November is brewing up to be a massive all-round month for the company. It's going to be one for the books. Consumers can now purchase vehicles without having the heavy burden of a sinking resale value. With a swappable battery, the vehicle is essentially getting a fresh heart transplant every single swap. The only lasting wear and tear of the vehicle is actually the shell, not the inner workings. Consumers can thus purchase vehicles with a relatively smaller amount of commitment, and you could almost consider vehicle purchasing to be less strenuous and long-lasting. It's for these reasons that I really do think we will see an absolutely massive delivery month for NIO, and I wouldn't be surprised to see a figure close to 6,000 vehicles over the course of the month. This, as I said before, would be huge news for investors and analysts, who would then likely raise price targets, which in turn creates huge movements of shares being bought, which in turn rapidly escalates the share price. This lull in share price that we have seen is, in my opinion, the perfect buying opportunity. I really do think these valuations will drastically change after their November delivery release, and we may never see these $50 valuations again. There is so much hype and promise in this company, and investors have really finally realized just how far this company could go. They really are leading the pack and now have ample cash and cash equivalents, they have worldwide expansion prospects, and they are ever increasing their delivery capacities. In my opinion, I think that any share price under $60 is a fantastic long-term buying point. However, a share price under $55 would be ideal if this happens before the November delivery release date. It's important to remember that we are also heading into a rapidly approaching NIO Day, which historically has seen a steady increase in the share price leading up to it, with a vast increase the day of. I would not be in the slightest surprised to see the share price around the $80 mark by NIO Day and rapidly climb into triple digits by Q1 2021. With an emerging economy, this company is perfectly poised to continue growing, expanding, and driving up their delivery output along with their share price. I really do see intense upside with this company. Let me know what you think of them currently. Are you selling, holding, buying? What do you think of these valuations? And where do you think these share prices could reach in the coming quarters? Anyways, everyone, thanks so much for watching. I really do appreciate it and the continued support. Hit that subscribe button if you haven't already. Smash that like button for the YouTube algorithm. I would really appreciate it. Anyways, I'll see you all in the next video. Cheers.